I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is November 2nd, Thursday, 2023. So we had this big bullish day again. Obviously, when you're getting into a situation like this where we've hit some bottoms, plenty of times, even on the daily, it's oversold twice. You're going to get some bullish reactions. It looks heavy and it was going to sink, but this does also make sense for quarterly shift sort of situation where we're going to get some bullish momentum for the fourth quarter. Maybe, try to get that rally for November, December. October apparently obviously was not that way. Generally, October would be going with the bullish quarter, but in this case, they were coming down, still making lows, right? But eventually, you're going to have to say, okay, well, this looks like you don't want to catch tops or bottoms, but, and they're much easier in selling versus buying, obviously, because and to my opinion, selling is much easier than buying because buying, when it buys, it just keeps going. There's not really too much structure there. As you see, they're hunting. This is a straight manipulation. There's no structure here. They're in a hurry to wipe out that high. I was telling yesterday. So watch yesterday's video so it makes sense. I'm showing here that we're literally, one of the options was literally just to buy right from here. Right? Why? Because I know that they're constantly moving price like this, especially when they're hunting liquidity and trying to squeeze everybody out who is making a lot of money selling, right? So with that, all that being said, look right here, for me, this is a general idea that I would like to sell from here, right? But the thing is when it gets up here, you don't want to be trying to catch sells. You can still make sells, and I took a trade that was a sell today, but you can't marry it because they're gonna grind it up slowly, drive after drive, 3 drives, 4 drives, however many it takes, to the point where you're fed up or you gave up, and then boom, you see a displacement, and that's what you should be waiting for anyway. But the idea is, I don't expect all this to happen in one day, but this coming in here, especially with non-farm week, and rates. This is what they do. They use these events. So if you could literally just as a model just wait for this week and just wait for price. If you have a good bias on where the weekly candle is gonna go, especially like up here, you see that that we reached up and took out the previous week's high. So that's a level on the chart that's important. And if you see here, you can see an imbalance right in between there. See that of this this is the daily chart, bottom left, but you can see this is the imbalance, but you can see what's left. When they came up here last week, they didn't seal it. So again, another reason why they can come back up and perform price action this way by then sealing it. So beautiful. But with the logic is what helps. And then I mentioned, dollar doing this, poking up a little bit into this wick and then selling if we're going to be really bullish. And sure enough, we gapped down with dollar. It just literally gapped down here and then came down. So same price action. You don't know how it's going to get delivered, but what's good is the ideas, right? So let's go into this. I got to make this video short, so or do the best I can to try to. So as you see, this is where we end up, right? And this is Nas, obviously. So that high right there, plus that liquid, that imbalance. Remember, I told you that what was not sealed in between, right there. What was left, I highlighted it here, and then that's the high of the gap too. And as you see here on the big range, we have retraced now to a 61. And pretty much you're not gonna get your wishful sell that you want, because they're gonna grind it out. They're gonna grind it up slowly up, so you can't be involved. And the learning lesson in this scenario with this type of area is that just keep buying, right? Because let it give you a reason why you shouldn't buy anymore, right? And you want to see some solid structure, but when you get this, you're gonna get constant new candles that just make new highs. So on whatever time frame. So that being the case, let's go to smaller time frame. You'll see that we opened up, all right, and it was just constantly buying, right? In these scenarios, what's good to see as far as order flow goes is these imbalances hold, and they don't. There's not too many deep retracements, but this was a good one, and I was expecting this only because, as you see here, we'll take a look. You can see this imbalance held, taps into that imbalance. These down candles are going to hold pretty well. Price comes in here. There's an imbalance there. Taps in. Um, this was better on a 15-minute. Yeah, you see this over here? This 15-minute right there, that imbalance taps in. Okay, so then the price is already up here. We've already hit this target, which was one of my targets, which was the uh, last week's high. So we're already there at 9. So this is the thing. You understanding that you're not gonna get the real sell that you want, right? You have to like understand that. I mean, not saying it couldn't have. It can, but I mean, it's not realistic. And then, as you see here, we're knocking on the we're sealing up. We have the imbalance here to seal, right? But we have that weak high, which is in the green. Let me extend that so you can see that. So that being the case, then 9:30 pops up here. So we get this price pushed up right back to the previous action at 9 o'clock, right? And you're sitting here hitting the week, right? So with this, I see this as a sell. Um, it's gonna be better on a smaller time frame, but let me go to 1 minute. Let me see if I can do this on 1 minute. It's better. So so zooming in here, this doesn't take out that high. All right, this doesn't take out that high. And if you look at the rest of the assets, let me see if I can put a 2 minute here. And let me just open it up a little bit. So that's this area I'm talking about here. So we have right here a lower high here, and here we had higher highs. I didn't put it there. I'm going to do it live with you here. So as you can see, it doesn't take it out. It doesn't. It's very short by points, but it's still a lower high. So let me just do that. So with this divergence here as a crack here, that's pushing the price down. But the one who saved the price as far as the strength in going up, ES again. So you have these higher lows right here, and right here we have lower lows with Dow, we have lower lows with Nas, but we had higher lows with ES. So with that being said, with that logic and mindset and understanding, coming up here is no problem, but I'm interested in two trades today. I don't give a fuck where this thing goes. I want to sell and a buy. Why am I looking for a sell and a buy in that order specifically? Well, because we're already up here, right? So because we're already up here, I end up taking the trade here, but it fills me here with a second addition. So I put two contracts here, two contracts here. If you're asking what specific level, it was even sub 1 minute, but I'm just going to show you here. When this candle broke down and then this got a retrace, I entered here. Then my next two contracts, it was a total 4. Then when the price came down and came up in here, the momentum, I'm taking the trade. But this is a confirmation. This does pop back up into it, and I don't want it to pass 50% of that candle anyway. The stop loss is going to be no farther than that because this imbalance gets presented. So let me zoom out real quick. I'm going to show you this. I didn't drag this out yet. This was used for this imbalance first, right? So prices getting held, and yes, they shot up one more time with. That's so stupid the way they do that, bro. The wick underneath my cursor right there, the big tall one to the right there. This shoots back up, and it's pretty dirty, but it's wiping people out, and it's getting to that real close to that 50% level, which is fine. But any farther than that, it's not going to work. Where's my target? Well, I had this liquidity here drawn. Let me show you the trade so you can see it. I have this liquidity drawn here and right here. So see that? See how the imbalance is here, and then it pokes up right there. And then the entry level, They're showing me 931, but it was really up here. But when you enter another, so I have a total of 4 contracts. When I enter another 2 contracts, it brings the drop here. So just so you understand. But the important thing is that from here, we're looking for the closest liquidity, right? We want to get a liquidity rate before we even go up. So you understand that yes, this could be if you're looking for this to be the big sell, it's probably not going to happen. Look on the 15 minute over here. You can see that piece of liquidity, and it's sitting in that gap, the one I mentioned. This is where 8 o'clock was. So all the 8 o'clockers, people who try to get in early, obviously that's sitting. This is this low right there. This is why I was very, very confident in holding this, to not only obviously to take this, but this was my best case scenario. And look, beautifully, came right to it, man, to a point. And now it's like it's like 10. It was like 10:11 or the time 10:12 or something like that. 10:10 or something. But this was the logic here. But that was the good sell. This is the one trade I wanted, because I don't know what's going to happen. And obviously, as we just discussed, it has potential of just grinding up. So that being the case, perfectly, when this comes down, just a 1 minute, yeah. And as you see, we come right into that 15 minute. Now it's highlighted right there. You can see that, right? See that 15? That gap right there with that low, and that's 8 o'clock. That's literally 8 o'clock, that low. So right to it here. Now this is a good time to take a buy, because why? I don't even if it's bearish, I will still take this trade up for a retracement to take out some liquidity, and then maybe come down again, right? If it's gonna do that. So I have 2 reasons why I should buy here. And if it's, well, it ended up being bullish still, as you see. But if it's bullish, I'm in the right direction already. For me, taking the profit above this high right here, which that one I was just mentioning, because that looked good for people. When they saw this and the price came down, everybody got into here and they're moving their stop loss. So this is common sense price action would tell me that, we're going to come up and attack this area. Right now, once we reach there and this buy happens, how it happens is with this 1 minute, you can see here that we get this price that moves up, this previous swing high, and then it retraces right back into where. And I tell you every other day, the last candle coming down with its wick is generally another place to enter if the price comes back in and the stop loss is below that low. Here's another example of it. If you didn't catch this, and if you wanted to catch the momentum while the candle is moving up, you could push it at any time. And if you did that, then your stop loss would have to be, let's just say you did it at this closing of this candle here, because it's bullish and you saw this pattern happen. Well, there's a couple ways to handle this. You could have, if you entered right there, you'd have to put your stop loss at the bottom of that. The next place you could move it is 50% of the wick, which is right there. You could do it at the open because you don't expect it to pass the open, right there. Or you could do a little under 50% of the candle, and that's because you believe it won't go. It's a bullish candle and it'll stay protected, and it sure did. In this case, if you look at this next candle, the 10:17 a.m., you can see that this 10:18 candle retraces back more than 50%, last 25%, but notice it doesn't even seal the price, and it doesn't come below the open. So this is the logic I just was trying to share with you now. So that being said, obviously main target for me would be that high, and then look, sell, buy. I'm happy. I don't need to take any more trades, but I am available to trade at 11 o'clock, and what this is just guaranteeing profits on a day like this as well. And that's the mindset you need to have, because if you just take the profits, you'll have the profits and you won't be worried about having to take more trades because you maybe didn't make profits or whatever the case is. So keeping it simple before 11 o'clock is the best thing. I'm telling you, 9 to 11 o'clock, you don't want to be fucking around afterwards. I mean, you can, but it's like, look at the shit you're gonna get. So the least that I did is, when this happened here, I got thirsty and tried to take a sell, but to see if it would come down and break here, and it didn't. It popped up on me, and at this point I'm done, because at this point I also know, okay, it's gonna go up and it could be a slow grind. So let me wait for some type of better location to just take a sell, a quick sell, and that would be it. I mean, I know I'm not going to be chasing and holding it for the rest of the day either. So take a look. The price does come up here, right? And at this point, after this high right here, I pretty much get two drives. I get the one drive up, retrace, and then I get once I break above that high, you get one, two, three drives right there. But three little drives, not three main drives. So this would be two main drives up. And I would generally want to take a sell after at least after taking liquidity. I generally want to take a sell after it has purged liquidity again, right? Because that'll algorithm will do that, and you'll see candle one, candle two, candle three, boom. By this point, you're done. You're not gonna trade this. Well, here I get a bearish candle right here, and then I get this next candle that pops in. So beautiful trade right there. And again, I don't mind taking a loss or two here because of the fact that my reward is generally always 5 to 10x minimum. So dealing with the ranges, right? So sure enough, price comes all the way down here. And again, this is a buy model. So you have a higher low, you have a higher high. You expect a retracement, but you're not going to get it as deep as you want, maybe. So minimum for me is going to be right here with these two down candles right there. These two down candles coming into this price right here, that imbalance and below her. And then you can see that we tap right into these last two down candles. If you're waiting for this little imbalance type of thing, you're not going to get it. You didn't get it. If you waited for it to hit the open of this candle here, you didn't get it either. Very close though. And then on the 5 minute, I think, wasn't it on the 5 minute better? I think. No, never mind. I was thinking of something else. Anyways, so that being the case, and then here you go. So you have your higher low, higher high. When it retraces, this is good enough. If I was to put a fib, you would have missed it by the 50% as well. Another reason why it's good to take it at the 38. If I show you this, again, I didn't really need this per se, but you'll see that the price misses the 50. See that? But it doesn't have to, and that's why ranges and fibs don't work too well with everybody else. Dow, I like Dow with fibs. Dow is the best with ranges in my opinion. S&P's not too bad, but I mean, as far as Dow goes, is the best, but not so much with Nas, I noticed, but you'll see that the idea is to take a sell into this previous price action, but then the thing is you have to understand where support can be. So let me move this fib because this fib is not that important. It's just visual. But this imbalance that I mentioned earlier in the day, we end up, if we break above and we come back in it, this could be a very good place where it finds support. So if you look, you take a look, you see how it pops right in. You can see almost 50% of that zone right there. And it's not random, it's a specific levels, that imbalance right there. You can see that it's respecting, right? So you have that, you have this down wick, a lot of little confluence right here. And meaning it's going to be hard to push through. So this, as you see, this inversion imbalance, like the prices came down, came up, came down, came above it, came down into it, and it's held. So yeah, so that's pretty nice right there. And this is when you should be exiting if you did, and you see the support here, not the support, the resistance here. If it was going to keep going, it shouldn't be breaking this candle right here, in my opinion. That's why I got this red line dragged all the way out. So price should be bumping into it and then just keep coming down. It can come back up, but it should keep coming down if it's going to be bearish. We break above this. So you break above this, you see it comes up. It doesn't even take out that high, but it doesn't even need to. It shows you, boom, we come retrace back into that consolidation. That becomes a support, nice support. That's another buy. So higher lows again. Obviously, they kept moving the price up. See, this is what I meant by inching up higher and not letting you in. Look at this shit. So just to show you the fuckery and to show you that this market is manipulated, 100%. They grind it out. They know this is a good sell area, but they constantly give you little small ranges all day, and you shouldn't even be trading anyway. But if you did, this is the logic. Look what they did at the fucking end of the day. This is what they do at the. I haven't seen it bad like this in a long time, to be honest with you. But look what they do at 4:30. Look at this. Price is slowly coming down here, but then they out of nowhere, 4:30 comes in and fucking shoots it up, shoots it down, shoots it back up. Look how much range they. And this is all in 60 seconds, literally. It's like, yo, you look at the whole, look at all this. How many hours is small ranges, small candles, and in fucking 30 and 60 seconds, they move up. The amount of points is like damn near 100. Like fuckery, and especially, of course, they do it at that time of the day. And this is why I don't hold trades. This is a prime example of why I don't do holding trades, and I'm not a swing trader. Even though swing trading sounds great, and everything has its pros and cons. But what I would have liked for a swing trade is me understanding that this is the low, and I'm holding to take out this high. I know I'm in this range. See this range right here, the bigger one. So this one got cracked, right? And this is just a prime example of these ranges are meant to break, right? So now you're really in this range now, as far as bullish on the bullish side. You're in this range from here to here. So I am gonna put a fib from here to here, and what is that? 17.25. 17. Okay. Okay. I'm doing this so I could just not have it so big and move it over. I'm just going to put that there. But, I mean, obviously we're in this range here. Right here. So we're still bearish, but there's a lot of bullish momentum. Take a look at the overbought area on the 4 hour now. We were down here and sure enough came up really deep. So, and they know this is they know everyone sees this, and this is a great selling place. So, which I'll get into, but on the bigger range here, we get to a 61, we're now here. So when we're coming down and you expect to break this low and create some type of range, a retracement this is actually healthy. I mean, there's nothing wrong with this. This is what it should do. So at the least. So knowing here the higher highs and higher lows, the shift of structure right there, and understanding here, I'm not surprised that the price is here at all or anything like that. So, this is a good learning lesson in general. I think that was discussing all of this, right? And then let me just show you Dow. Very similar story. And Dow decided to come. So I'm pretty sure I mentioned yesterday the 50% of this wick. I think I did, didn't I? I put a fib right there, and we pretty much came to a 50 level on that wick right there on the 4 hour. And as you see, we came to a 79 right here nicely on the range here from here. Came to a 79, and look at this. I mean, look at the actual candles. This was a big giveaway that each candle is very bullish, and there's not retracements going on in each candle. So with that kind of signature, that's fucking manipulated, dude. I mean, there's no structure in there. There's no normal flow. That's just straight up. So that's definitely on purpose, and they wanted to get everybody out here. So when we made the video here, we didn't seal the rest of that imbalance. If you watch yesterday's video, so it makes sense. That little space in between right there, in between here, see that in between this little space, it wasn't sealed yet. Now, obviously, we went through that, so you're constantly bullish. And then the liquidity here, and then I mentioned also, I love this area right here, this 4 hour imbalance that's left over, and I dragged it out, and it coincided with the 61. See that? But they blew right through that too, so no big deal. What's your next targets after that? Obviously, like we mentioned, I don't know if I mentioned it, but I might have said that wick right there. And then after that, we have the gap sitting here. So that gap can't miss that. And then after this open of this 4 hour candle, you got the 50% and then the high. So I mean, we're going straight up. It's not like we're not. So I think what might happen is the November and December we might get some bullish activity, man. We might spend some time higher high, higher low, wiping out this range. And I might even do this. I'm gonna put a range here, just from high to low. Just, nothing perfect, but well, pretty much perfect. But all right, so this is to the left here. I'm gonna move this all the way over. So don't get lost. You can see that, right? Let me make it thicker. It looks like it needs to be thicker. Uh, let's do that. I'm just zooming all the way out. So, you know, look at this range from here to here. Where's 50% of that? Look where it is right here. To me, yo, this is suspect, and they're gonna wipe this probably out. Oh, and I wanted to remind you, and I got this big ass blue line right here. Watch this. This big blue line that I got right here. That was for the previous month of September, the low. Remember when we opened up, I said that we would come all the way up here and seal that. Well, that's what that blue line is. We did that today, so I'm gonna delete it because it's not important to me. But you never know. It could be bouncing. It could bounce from here, possibly. But I'm gonna delete it because it's not necessary. But and then as you remember here, we had that little space in between that month and that month. So the month of August and the month of October. So in between September, right there, that little green line I have pushed all the way out right there, which is right here. This green line right here. Um, and that high, which is going to be the high of October. Look at that little space in between. I'm gonna highlight it so you see it. And yo, I think we're coming for that because we just fucking we just did the same examples on all these other imbalances. So this little space right here, I'm gonna drag that out. I think that's a very high area to hit. It makes sense. I mean, look at this. There's no strike. It's just fucking straight up. So I like this area next. I'm not saying we're gonna just shoot straight up for it or anything, but this is in the cards. So that makes sense to me. Let me just show you the day and how you would have handled this. Same story, constantly pulling up. Let me show you this. Remember this daily imbalance right here? This purple lines? I'm going to show you. It's this up here. Remember when we sealed it? We wanted to seal it. Well, that was sealing it. This is 8 o'clock. But look how the price when it got in here. So we opened up right here, and we actually got into it yesterday. But we got up higher, and then from here, between 50% of the daily imbalance, that's this red line right here. Look how it taps it exactly. That's not a variation. That's exactly 33,429. So measure from here to here, and you'll see it's pretty perfect. But obviously, no one. I mean, New York isn't generally trading that early. Normal people ain't. But you get this imbalance here, right here, pushes up past that. We have accomplished that, and now we're reaching that 4 hour imbalance, which is that one that I told you that I liked. We're reaching that, so that needs to get sealed right there. Remember with the 61 on this range. Anyways, but they're look constantly look at this. Have you seen a day like this? When's the last time you seen a day like this? This is like 2021 all over again, right? 20 and 21. But what was I gonna say? When you see momentum like this and you see this type of movement, what's the best thing to do? Just keep buying. If you try to sell this, you're fucked. I mean, they're gonna constantly grind you. So how many times did you say, "Oh man, if I just was to stop trying to sell and buy, how fast you turn into a winner?" And that's what you got to do. When you just don't fight the trend, right? But as you see this imbalance right here, you see this down block right there as well. Then we got 930. Okay, pushes it up first, pushes it down back into that imbalance, found support, right? And stayed in that down candle. See that? All right, beautiful. That would have been your buy. Where are you taking it? Above this high, into these gaps here, And look how we got to 50% of that wick. That's that wick, that 4 hour wick right there. This is the 10 o'clock a.m. wick at at October 19th, Thursday. That wick right there. See that? And if you take a look at that, look how we draw right to it. So look how the price is drawing. Where is it drawing to? And you can see, look at it. It fucking closed. The candle closed on it. So pretty nice, right? But that would have been an entry, and then another opportunity would have been right here in between. No, I'm not gonna do that. What's the 5 minute? Yeah, let me go to 1 minute. I have to be done. 30 minutes. Fuck. So a little more clear here. Pops right into that, right? And doesn't take that low out. And then this wick controls. Look at each bullish candle holds its price. And then that taps into that little imbalance. This little 1 minute, I'm not gonna even draw it, but you see this candle right here? See how it taps like a hair below? That's it. That's all it needed. Then if price comes above, this is a second stage, comes in and retraces back into that block. That's another entry. Price pops up, comes back where? Comes back into this block right here. And preferably that down wick. See this down wick? See how it's just one down wick right there? Look to the right. See how it taps in? That's the same idea I was just giving you with Nas on that buy. Yeah, man. And then so that's, and then where could you have got in again here? Here's a higher high, retraces. Look where it retraces. Same level, taps into that imbalance by the hair, and that's a signature that they do. And sure enough, look at this down wick. Look to the right. Same level. All these ideas, but if you fight this and you keep trying to sell this, you're fucked. So that being the case, what else I want to just show you? Oh, show you dollar. Like, see how the dollar gapped? So that was the projection I was saying of coming down. We came all the way down here, back into this weekly imbalance. And this is consolidating. This is ugly, man. No one should be trading. I mean, in my opinion, this is not a market to be in at all. It's just not. But I'm not counting the bulls out right now. That's for sure. I'm not. But and then yeah, I mentioned this already, didn't I? Yeah. So that being the case, what do I want to tell you? So continuing forward, look, this right here, this lower low and lower high, just comes down. We could see, for not picking tops, let's just say that we're bearish, right? Let's just say that we are bearish and we don't expect to be coming up here. And this is, we're trying to find a turnaround. We're trying to find a peak right here. You see how the fuckery, you thought this was it? Look, came up again, and then look, comes up again, right? So I'm expecting that kind of drives. Here, manipulation up here, and then turning around, right? When I make the example of it coming down like this, I'm not, you don't expect it to literally just come down, right? So you want to see some type of peak or some type of structure, like something like this, creating a support, and then you probably want to wait for this to shift and then be involved coming down. Obviously, if it's going to shift here and gets into the 70 or whatever, let's just say it sells from this 70 after it's done what it's doing, then okay, then we'll try to come and take out these lows, right? If that's the case, then we're going to expect dollar to come down a little bit. We're going to expect, again, if we're talking bearish, if we're expecting for us to peak out and then start coming down again, then I expect, dollar to, maybe do this or some shit and still come up here, specifically breaking this high. All right. Okay. So that's that option if we're bearish. That would mean, we do some shit like this. Whatever. That's a little bit better drawn, right? If we don't see this bearishness, and this the rest of the quarter, grinds up slowly to wipe out these people from sellers, but not really break that high, and get the Christmas rally, then I'm expecting price action obviously to maneuver like this, which is where we we still come down, right? Right here with dollar, but we come back up like this, and then we continue back down type of shit, and whatever. I'm just gonna do that for the sake of it, right? So if we're bearish on dollar and we're slowly bullish, then obviously I'm gonna expect price to do this. So we can still, we could still come up, type of shit, and then we come down, maybe balance some of this price range. Let me take a look. I don't know. I can even, it can be as deep as this, who knows? But and probably not. Let me do this. You know. Um, you never know. I mean, all in this month. In the whole rest of the year, I don't know, but you know, it might be, something like this. You know what I mean? So I don't know, right? But that would make logical sense. So even we could still retrace back here and then buy back up, but there's a lot of imbalance right there, right? Look at this daily candle right there. See that daily candle right there? So that's explaining me coming back in. So where's, something like that or some shit. So all right, I hope this helps you guys. Take care until tomorrow. God bless.